Welcome back. It is 14 away from 8 now. Forsyth Barr senior equity analyst Rowan Corman-Smith joins me this morning because we need to talk about commercial property, which appears to be performing well as an investment. This is thanks to our partners, Forsyth Barr, Monday Markets. Rowan, good morning.
Good morning, Ryan.
Good to have you here. So tell us about listed commercial property. How well has it been doing and why?
Yeah, so the sector's actually up 17% this year. And that's outperforming the broader equity market, which is up a couple of percent. And as we know, residential house prices, which are pretty flat. The commercial property sector, they're the owners of big buildings like Commercial Bay, the office towers on Auckland's waterfront, the Sylvia Park shopping centre in there, Highbrook Industrial Estate, Wakefield Hospital down in Wellington. So this is some of the best commercial property in New Zealand. And it's professionally managed, so you're not called out to clog a drain, fix a roof. They do all of that for you, so it's quite an easy way for investors to gain exposure to some of New Zealand's best commercial property assets.
What's been driving the gains?
Yeah, so there's a couple of things there. First one, interest rates. It's a sector that pays out a lot of its income, and its income's pretty predictable. There's leases in place to high quality tenants like government, like big corporates. So that means they can actually pay out this income quite easily, and they pay yields of 5 to 8%, and that's quite attractive versus term deposits or corporate bonds, which have got down to 3.5% for term deposits and 4% for corporate bonds. So that's been the yield play, and the other one's been the assets themselves. So share prices move about, and the share prices have actually gone below the net asset values, so the underlying value of the commercial property that these vehicles own. So investors were effectively buying the buildings for a discount below what they could do if they went and bought it directly.
Is this going to continue?
Potentially. The sector's still trading below net asset values, below book value, so that should continue to support the share prices. We also have falling term deposits, and we think that dividends from the sector can continue to grow. We've got interest rates coming down, which is one of their largest costs. You've got fixed increases in the leases, so that should step up each year. So we are actually forecasting a bit of dividend growth out of the sector as well for the next little while.
Why are they priced lower than their assets are worth at the moment?
So a couple of things. One, valuers. So the assets are valued each year. Valuers are pretty slow to move. They need transactions. And we have had a very slow commercial property transaction market for the last few years. And the share prices tend to look forward. So when interest rates spiked, they really discounted the values of the assets on book, and that saw the share prices hit below net asset value. We've seen the valuations and book values stabilise. In the last 6 to 12 months, we haven't seen any further downward movements in the asset values. So the share market's got more confident in those values.
Is there a shortage of this type of real estate in the market, or are we about right?
It's a good question. There are multiple ways people gain exposure. There's the listed market, but there's also things like syndicates. But you'd probably say, versus other markets, we've got quite a high level of property on the listed market. And there's quite a good range to choose from. They tend to be quite sector specific. We have office, like Precinct Properties, Vital Healthcare, they own hospitals. Goodman Property and industrial property for industry, they own industrial property. And then there's the likes of Kiwi, which is largely focused on retail. So you can kind of pick the sectors you want exposure to.
Hey, good to have you in, Ron. Thanks so much for being with me.
Well, thanks for having me.
Appreciate it. That's Forsyth Barr senior equity analyst Rowan Corman-Smith. It is 10 to 8 on Herald now. For an update on South Island news, Claire Sherwood is...